This is Alan Bush with the Daily Financial Forecast for Thursday, May 19th. Stock index futures coming under some pressure yesterday after the Fed released the minutes of their more recent policy meeting, indicating a bit more of a hawkish tone, although the indices held up relatively well yesterday, closing only a little bit lower. But with the Asian and European traders getting a look at the news and the statement, some selling coming in the overnight trade and then following through today. Also some sell stops apparently hit. Our feeling is, though, that the Fed will probably not be in a position to raise rates at the June meeting, as several Fed officials have indicated. So I think this panic sell-off, if you want to call it a panic sell-off, to some degree it is under some severe pressure price-wise, but it looks like volumes are really not that heavy. So I would view this as a buying opportunity for the indices, and I think that we will see some recovery later this afternoon. Also, I do not believe that we have topped out for the year. In fact, higher prices are likely later this year, including new highs for the move in spite of the hawkish Fed. Now, moving over to the currencies, seeing the dollar index advancing to a new 7-week high. This primarily due to comments from Fed officials over the last 2 weeks, basically indicating that there could be a rate increase at the June meeting, or at least they were not taking a rate increase off the table at that meeting. Of course, we did have those minutes yesterday suggesting that there is a possibility of higher rates near term from the Fed. So that's supporting the dollar. But I really can't imagine the Fed getting any more hawkish now than they have been over the last couple of weeks. So I think the rally in the dollar may be slowing right now because dollar strength has been almost entirely Fed driven. Also in the pound, we are seeing prices a little bit lower, even though we did have retail sales in the UK coming in a bit stronger than expected. So I'd be inclined to think that the British pound may come under some pressure from here today and possibly over the next couple of weeks, especially with the June 23rd referendum looming. That's the referendum for the UK to potentially leave the European Union. And the Australian dollar now falling to an 11-week low. This due to weaker than expected employment numbers in Australia. Interest rate markets falling hard yesterday after the statement was released, or I should say the minutes from the recent policy meeting. Since then, though, we have seen some recovery in the 30-year bonds as lower stock indices and weaker commodity prices are supportive to the long end of the curve. Also, the probability of a rate increase now at the June meeting bumped up a little bit to 30%. Yesterday it was 19%, and at the December meeting it is now 77%. Some analysts are calling for 2, possibly 3 rate increases from the Fed this year. I do not see that happening at all. Maybe just 1 at the December meeting after the elections, but most likely not 2, not 3. And I think that the Fed will be very slow to raise rates, even though they are talking hawkish between meetings. Once the meeting comes around, I think they will not be in a position to raise rates anytime soon. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.